Are you feeling overwhelmed by the world of investing? You're not alone. Many people find themselves standing at a crossroads, trying to decide between two popular options: mutual funds and ETFs. It's like being at a carnival, surrounded by enticing rides, but unsure which one to hop on. Let's take a moment to unravel this mystery together so you can make a choice that aligns with your financial goals. Imagine for a second that investing is like building a house. You have two paths before you. On one hand, you could hire a professional contractor who will manage every aspect of the construction for you. That's your mutual fund. On the other hand, you could opt for a DIY approach, where you purchase pre built materials and assemble the structure yourself. That's where ETFs come into play. Let's dive into the world of mutual funds first. When you invest in a mutual fund, you're essentially placing your trust in a professional fund manager. This expert pools together money from various investors and uses it to create a diversified portfolio of assets, stocks, bonds, or other securities. Think of it as a communal pot where everyone contributes, and the fund manager is the chef who decides how to prepare the dish. One of the standout features of mutual funds is the professional management they offer. You don't have to spend hours analyzing stocks or keeping up with market trends. The fund manager does all that for you. This can be particularly appealing if you're someone who prefers to take a hands-off approach to investing. Another significant advantage of mutual funds is diversification. By spreading your investments across multiple assets, you reduce the risk of losing your money. If one stock performs poorly, others might perform well, balancing out your overall returns. This can provide a sense of security, especially for those who are risk averse. However, it's important to note that not all mutual funds are created equal. There are various types, including equity funds, which invest primarily in stocks, debt funds that focus on bonds, and hybrid funds that mix both. Each type comes with its own risk and return profile, so it's crucial to align your choice with your investment goals. Now, let's shift gears and talk about ETFs, or exchange traded funds. Imagine these as pre-packaged investment bundles that track specific indices or asset classes, like the S&P 500, or even commodities like gold. When you invest in an ETF, you're buying a slice of an entire index, rather than individual stocks. One of the most appealing aspects of ETFs is their passive management style. They typically require less oversight and lower management fees compared to actively managed funds. This can lead to significant cost savings over time, which is always a plus when you're trying to grow your wealth. Speaking of costs, let's take a moment to discuss expense ratios. Generally, ETFs boast lower expense ratios than mutual funds, which means more of your money stays invested and working for you. This can be a game changer, especially for long-term investors who want to maximize their returns. Another attractive feature of ETFs is their tax efficiency. They often come with certain tax advantages that can benefit long-term investors. For instance, because of their structure, ETFs typically generate fewer capital gains distributions compared to mutual funds. This means you could potentially keep more of your profits in your pocket, rather than handing them over to the taxman. Now that we've explored the ins and outs of both options, the big question remains: which one is right for you? The answer isn't one size fits all. It depends on several factors, including your risk tolerance, investment goals, and time horizon. If you're someone who's comfortable with higher risk and enjoys having more control over your investments, ETFs might be the way to go. They allow for more flexibility and can be traded throughout the day, just like stocks. This can be appealing if you're looking to take an active role in managing your portfolio. On the other hand, if you prefer a more hands-off approach and value the expertise of a professional, mutual funds could be a better fit. They're particularly beneficial for long-term investors who want the peace of mind that comes with having an expert manage their investments. Don't forget to consider your investment goals as well. Are you saving for retirement, a house, or your child's education? Aligning your choice of investment with your financial objectives is crucial. Also, let's not overlook cost considerations. Take a close look at the expense ratios and any other fees associated with each option. Over time, even small differences in fees can add up and impact your overall returns. As you navigate this journey of investing, remember that it's a long term game. Take the time to do your research, consult with a financial advisor if needed, and make informed decisions. Investing isn't just about numbers, it's about creating a future that allows you to live the life you want. So, whether you choose mutual funds or ETFs, make sure you're making a choice that feels right for you. After all, your financial journey is uniquely yours, and with the right information and guidance, you can confidently take the next step.